Does this sound familiar? Only $29 a month, only $80 every 2 weeks, only $300 for the car, only a small credit card balance. Small numbers, harmless numbers, numbers that don't scare you. But here's the question most people never ask. How much will you actually repay in total? Not this month, not the minimum payment, not the comfortable number on the screen, the full amount, the real amount, the amount after interest, after fees, after years of payments. And suddenly, the small number becomes something else. It becomes a disguise, because debt rarely introduces itself as danger. It introduces itself as convenience. A better phone, a nicer car, a holiday you deserve, a lifestyle that feels just slightly out of reach until someone offers to split it into payments. And that is where the trap begins. Not because you are bad with money, but because your brain is being shown the wrong number. In financial psychology, this is connected to something called mental accounting. Your brain does not always see money as one big picture. It separates it into little boxes: rent, food, car payment, credit card. And when each box feels manageable, your brain relaxes. It says, "This is fine." But the problem is, your life does not pay in separate boxes. Your income is one stream, and every small payment cuts into that stream, quietly, repeatedly, until your future income is already owned before it even arrives. This is why debt becomes normalized, because the pain is delayed. Behavioral economists call this present bias. The reward happens now. The new thing is here now. The comfort is here now. The status is here now. But the cost? The cost lives in the future. And your brain is naturally weaker at protecting a future version of you than satisfying the version of you right now. So the decision feels easy, and society makes it even easier, because everywhere you look, debt is presented as normal adult life. People don't say, "I owe thousands." They say, "My payment is only $250." They don't say, "I bought something I couldn't afford." They say, "I financed it." They don't say, "I gave away part of my future income." They say, "I got approved." And that word matters. Approved. It sounds like success, like someone confirmed you are financially capable. But approval does not mean something is good for you. It only means someone believes you are profitable to lend to. That is the part most people miss. The bank is not asking, "Will this make your life freer?" The lender is asking, "Can you keep paying?" And if the answer is yes, the system works. For them. This is how debt becomes invisible. Not through one big mistake, but through hundreds of small, socially accepted decisions. A payment here, an installment there, a balance carried forward, a subscription forgotten, a purchase justified because everyone else does it too. And then one day, you earn money, but it does not feel like yours. Because before you even touch it, parts of it already belong to the past, to the car, to the card, to the loan, to the lifestyle you bought months ago. And this creates a strange feeling. You are working, you are earning, you are doing what adults are supposed to do, but somehow you are not becoming freer. You are only keeping the machine running. And here is the uncomfortable truth. Debt can make a person look financially ahead while they are actually falling behind. Because debt can buy the appearance of progress. The car looks like progress. The upgraded phone looks like progress. The holiday looks like progress. But if those things reduce your future choices, they may not be progress. They may be pressure wearing the costume of success. So what should you do instead? First, stop asking, "Can I afford the monthly payment?" Start asking, What is the total cost? How much will I repay completely? How long will this payment follow me? And what future choice am I giving up for this? Second, separate useful debt from lifestyle debt. Debt that builds an asset, increases income, or creates long-term value is not the same as debt that only protects an image. One can be strategic, the other can quietly become a habit. Third, create a waiting rule. Before financing anything non-essential, wait 48 hours. Because urgency is one of debt's strongest weapons. When the emotion fades, the real decision becomes clearer. And finally, protect your future income. Every payment you avoid is not just money saved, it is freedom preserved. It is one less obligation, one less claim on your life, one less reason to say yes to things you don't want to do. Because the goal is not to look like you have money. The goal is to have control. And control often starts quietly, with saying no, with waiting, with paying in full, with choosing less pressure over more appearance. Debt becomes dangerous when it becomes normal. And it becomes normal when you stop calculating the real cost. So the next time you see a small monthly payment, don't ask if it feels affordable. Ask what it is hiding. Because once you see how debt disguises itself, you can't unsee it. If this video helped you think differently, subscribe for more cinematic explanations about money, psychology, and the hidden systems shaping everyday life. Because once you see it, you can't unsee it.